Hey guys, Jen Moretti here with Blue Arrow Lending. We have some tips today, what mortgage people kind of call the 10 commandments or 10 rules when you're buying a home. Things not to do so that you can make sure to get the best approval and the best loan. Number 1, do not quit your job, do not become self-employed, or change jobs when you're in the middle of doing a home loan. We use your income as part of your qualification for your loan, so it's very important that that stays the same throughout the loan process. Rule number 2, don't make any large purchases. Things like a brand new Mercedes. That is going to change the amount of debt that you have and the amount of monthly payments that you have, and it can change your approval. The amount that you get approved on is based on your monthly income and your monthly debts. So if that changes, it can impact your approval. Number 3, don't charge up your credit cards. Why? Well, as your credit card balances get higher or closer to their limit, say they get maxed out, it's going to change your credit score. Oftentimes, if your balance on your credit card is over 50% of the limit, your credit score starts to drop, and that can impact the interest rate or the approval that you get. Rule number 4, do not spend the money that is set aside for closing. Whenever your loan originator or your mortgage broker is working on your approval, they are using a set amount of money for your down payment and your closing cost. Well, if you go spend that money, you don't have anything for closing, and that will stop your loan in its tracks. Rule number 5, do not buy furniture or appliances for the home that you don't own yet. This is because if you put it on credit, it can max out your cards. If you go pay cash for it and it impacts the money you have in your bank account for closing costs and down payment, you won't be buying that home. Wait until closing, wait until after closing to furnish the home or get appliances. That's the best practice. Rule number 6, do not omit liabilities or debts from your application. A mortgage loan officer or a mortgage broker, their job is to make sure we have an accurate picture of your income and expenses every month. If we don't know about a $500 payment per month, or there's a brand new one that shows up, that will definitely impact the amount that you get approved for on your loan. Tell your loan officer or mortgage broker right up front what you have, because it's the worst feeling in the world to go under contract on a property that we cannot get you approved for. Limit the amount of inquiries on your credit. What does that mean? If you're applying for new credit cards or car loans or lines of credit or even mortgage inquiries, you really want to limit those while you're applying for a mortgage or buying a property, because when someone checks your credit, your lender will get a notice about it and they have to redo your credit report. And oftentimes they have to redo your credit score to make sure there's not a new account opened. It creates more work for yourself, and you would have to provide more documentation to the loan officer if there were additional inquiries. Do not make large deposits into your bank account. A mortgage broker cannot use cash typically. So if you have mattress money, what we call mattress money, money sitting in your safe, money sitting in a jar at home, and you need to deposit that into your account, your loan officer has to review any large deposits, and we have to create a paper trail for underwriting, right? So if you deposit cash or you have a lot of large deposits in your account, you're going to have to provide more documentation showing where that came from, or what those deposits are. So really try to limit the amount of large deposits into your account if possible. That leads us to don't change bank accounts. When you're going through the process on your home loan, whether you're purchasing or refinancing, a mortgage broker typically needs to get 60 days of your bank statements. So if you're switching accounts, that means that as a buyer or as a borrower, you're going to have to provide 60 days on this account and 60 days on the new account. It creates more paperwork for you and for your broker. So really try not to change any bank accounts when you're going through the process. And then do not co-sign on a loan for anyone, because what happens is, say for example, you co-sign on a car loan for your cousin. Well, that car loan, along with its $300 payment, gets rolled into your debts, and it now impacts your debt to income ratio, and it will impact the amount that you can get approved for. So when you are going through the process, you don't want to co-sign on a loan for anyone. Don't overstate your income on your mortgage application. As you go through the process, your mortgage broker needs to verify your income, and that's going to be in two forms. One from you with pay stubs, and another from your employer or from your tax returns if you're self-employed. So if you overstate your income, I make $1 million a year, well, ultimately your mortgage broker is going to find out that maybe you don't. Mortgage brokers have a ton of options, a ton of loan programs, and the more accurate your application is, the better your mortgage broker can be in finding you the best fit, the best solution for your needs. If you follow those 10 rules, our 10 commandments, you'll be in a great spot to purchase a home.